Hey, Tom, very good to see you. Today we are addressing a very important question, which is what does the Fed's rate hike mean for you? As you know, after months of anticipation, the Fed is raising rates that could mean that we're paying less for groceries, but more for our mortgage, our credit cards, or our car loan. It's not all bad news. We're going to get into it. But first, Tom, for the average person, what does this mean?
Hi, Erin. Thanks for having me back. For the average person, it's probably not good news at all. It just
Mm,
means that things are going to cost more. I don't see the advantage to higher interest rates as far as a cost concern goes. It means that mortgage rates are going to go higher, home equity rates are going to go higher, gas prices, as we know, are going higher.
yeah.
All car loans are going to go higher. So credit card costs are going to go higher. So all around, from that standpoint, there's not much good news for people.
Okay, so I want to ask a very specific question. If I had been thinking about buying a home or refinancing, we know now that rates are going to be going up. In fact, Tom, I was just checking the rate for a 30-year fix for the first time, now it's just over 4. Do I buy? Do I refinance now?
Well, I think it depends on everybody's circumstance individually. But with that said, uh, we know that the Federal Reserve has said that this year alone, they're going to be increasing rates 3 to 6 more times and perhaps another 3 times in 2023. I
Right.
guess really dependent on world events and how the economy goes. So if someone were considering refinancing, buying a new home, getting a home equity line, this would be the time to do it while interest rates are still at a pretty much an all-time low.
Right. Okay, so I feel like I'm hearing from you the big takeaway is this is not great news if you have debt, but this could be potentially good news if you are a saver or an investor. Why is that?
It could be because with a rise in interest rates, you're going to see uh, savings rates rise
Right.
for your money market accounts or your savings accounts. Hopefully, these interest rates increases will also carry through to the fixed income sector of the market, where hopefully we'll see interest rates on municipal bonds, corporate bonds, government bonds, things of that nature will go up. So for the person that's dependent on fixed income type of instruments or vehicles for their portfolio, whether it's because they need the income, want the income, or just to balance out their portfolio. That should be hopefully some kind of good news. But on the flip side of that, right, if someone owns some of these instruments, bonds, longer term, and rates are rising, you might see the value of those go down.
Mm.
So it's kind of a mixed bag at this stage.
Right. And that's why, Tom, I really want to get to this because I know this is something that you are very passionate about. It's known as the infinite banking concept.
Right.
And when we were very first, working together, you sent me my own copy of the book because I know you're so passionate about it. But this is essentially a concept that helps people become their own banker. And why is that concept essential right now with these rate hikes?
So one point I want to make sure that everybody understands is that it's not a vehicle or a product. It's a concept or
Right.
a way of thinking about your money. And why it's so important really simply is that in this process, you control your debt. There isn't an outside source that controls your debt. You control it. So when you need a loan through infinite banking, if you're using the correct vehicles and are set up the right way, you have a capital pool which you can go to that traditionally people haven't had in the past. Most people in a traditional sense either pay cash for something or they borrow money from someone to do it. And when you do either of those, you're losing interest. So if you pay cash for something, that cash that you spent will never earn you money ever again. And
Right.
if you borrow money, you're paying interest to another financial institution, and that capital and that interest that you pay will never make you money again. And and the compounding effect of either of those it could be worse than just making that purchase. So the idea behind the infinite banking is you when properly set up, you are recapturing some of that interest that you might have been paying to somebody else. Uh, and you're controlling that debt. So you're not under the obligations of a finance company to make sure that monthly payments are made. Like we saw the last couple of years in the pandemic when people couldn't afford a mortgage or couldn't afford their mortgage payment or their car payment or a student loan payment, right? Though when you owe somebody else that money, you're not in control of that.
Mm-hmm. And I am going to do the humble brag for you since you won't, but you are correct. The only Nelson Nash Institute certified advisor in New Jersey.
Correct.
And this is also about ongoing education, Tom, because I know you just came from a conference as well.
Right. A couple of weeks ago, we had our annual think tank down in Birmingham, Alabama. And not only do we have to go to that program every year, but we also have continuing education credits or services that we have to perform every year to make sure we're staying compliant with our certifications, that we're staying up to date on all the latest information. So it's not just a one and done type of thing. It's a continual learning process.
Yeah, it really is so interesting. Yeah.
For the record, that book that you showed, Nelson Nash's book, I've personally have read that well over a dozen times.
And you're making your daughter read it right now too.
Exactly. And I continually try to stay updated by reading it over and over again.
Yeah.
And honestly, every time, and I'm not making this up just for the sake of the video, every time I read it, I relearn something else or I figure something else out that I didn't quite understand in that process.
Mm-hmm. Yeah. I love that you are so passionate about this. I love that you and I get to talk through this because it is dense and I'm grateful to have you as a resource. Of course, if anybody's watching this and they would like to learn more about it because this is something, again, that you specialize in, you're passionate about, Tom, what's the best way to reach you?
Call the office, 973-394-0623. Email me, tjoconnell@internationalfinancial.com. If anybody would like a copy of Nelson's book, Becoming Your Own Banker, I will happily send that out to you. It is a book I am confident to say that will change your life if you read it.
Awesome. Tom, thank you.
Thanks.